Hello and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad, and joining me, my colleague Yatin, Mota. Well, Yatin, once again, it was a range-bound session. Sensex down over 150 points. Nifty also below the 25,500 levels. And overnight, we did see some tariff threats that did come in on the pharma sector, which could go up to 200%. But pharma stocks, that also remained quite resilient today, and they brushed aside this negative news, so to say. However, metal stocks, that saw that they were some of the top drags, given that we did see some subdued business updates that came in from Tata Steel, and the 50% import tariffs now being announced for copper. So it just extends beyond the basket of steel and aluminum at this point of time. But yes, volatile swings once again present in the market, and once again are subdued in a very quiet session that we are seeing. So Yatin, seems like market is not excited at this point of time, given the trade deal is also being dragged at this point of time, and now earnings season also is expected in just tomorrow.
Yes, tomorrow TCS will report numbers, and also today night probably we could see 7 nations signing a trade pact with the US, as Trump has put out on his social media platform, Truth Social. Whether or not India is in that list is to be seen, but it was supposed to probably happen yesterday night, but didn't happen. Hopefully, the market nervousness which is there currently ahead of the Trump tariff deadline and signing of the trade deal is something which will keep the bull slightly nervous in the shorter term. But talking about mid and small cap indices were flat in trade. As you're mentioning, Sensex and Nifty both trading in a tight range. However, the advance decline ratio was almost 1:1. Fmcg, auto, pharma shares did well. Also today we had a new listing, Krazak, that education company which sends students abroad and earns commissioning and consultancy fees. That stock saw almost 25% gains to the issue price. So that stock was in focus. But broadly, we had a range-bound trading session with stock-specific action on the large street.
That's right. Let's take a look at some of the top gainers and losers on the Nifty 50 then. The first is your Shriram Finance, extending its gain to the second day with about 1.8% gains. Bajaj Finance also doing well with about 1% gain. HUL, some of the consumer stocks were in play today despite the subdued session given the Q1 business updates, and the street has turned quite bullish on the sequential recovery of volumes, and they're expecting some pickup in the demand trends from the urban pockets as well. So you can see the likes of HUL seeing a gain of about 1% or so. Asian Paints also doing well. ITC was also one of the top gainer. Other than that, we can see Coal India and Ultratech also seeing a gain of about 1% or so. However, on the flip side, if you look at from the contrary picture, HCL Tech seeing a cut of about 2% ahead of TCS Q1 results, which will be due tomorrow. Tata Steel seeing a cut of about 2% or so, given the Q1 business update did not excite the street, and this did see some negativity on the provisional update and figures as well. Hindalco also seeing a cut of about 2% or so. Apollo Hospital, Tech Mahindra, they were also some of the top gainers and losers on the Nifty 50. But yes, mid caps and small caps, they exhibited a mixed trend. If you look at the small caps, they outperformed, 0.5% gains coming in from the Nifty small cap index. But yes, mid caps once again continue to be in the negative territory, but however flat in the red at this point of time. Yatin, anything that you're gathering from this particular space?
So if you look at the entire market, mid caps, especially from the healthcare and diagnostic space, were doing well. Metropolis was up almost 10% in trade. Medanta, that stock hit a fresh 52-week high, stock up 5%. Laurus Laboratories again, from the pharma stroke healthcare space, doing well, 20 rupees up for that stock and a new 52-week high. What was also doing well is the likes of SW Solar, PGEL, Niva, Bupa. Health insurance, all of these stocks gaining anywhere between 5 to 10%. What was not doing well, GAIL down 4%, Max Healthcare down 4%, and Vedanta, after whistleblower report, from the US, equivalent probably to a Hindenburg, put some allegations on Vedanta PLC, the holding company of Vedanta Limited, and because of that, we had some pressure in that particular stock. But broadly, stock-specific action continues on the large street, and as we were mentioning, the result season, especially from the IT pack, starts from tomorrow.
That's right. Now that the result season is going to also start, let's talk about one stock in focus today. That was your Union Bank of India, because the stock did fall today with about 3.5% cut after the street was unimpressed with its first quarter business update. We did say that the lender's loan book grew just about 7% from last year, which was not only the weakest loan growth that the lender has seen in the last 4 quarters, but also the 4th straight quarter when the loan growth has been in single digits. So back-to-back weak performance in terms of credit growth, the lender has been recording. On the other hand, if you look at the total deposits, that also rose in single digits, 3.6% on a year-on-year basis. And this is also the 6th straight quarter for the company when the deposit growth has been in single digits. Within this, the domestic retail advances, however, showed some good performance. That posted about 25% year-on-year uptick. Now, typically, if you look at the first quarter for the banking sector, it's typically a seasonally weak one, but the lower offtake of credit growth and the repricing of loans due to the rate cuts is something that is weighing on the overall industry as well. Yatin, experts said that while this quarter could be a weak one for banks, but overall they expect things to improve in the second half once the repricing of loans is done, and there could be some visible growth in loan book as well, and of course from the margins perspective.
Yeah, but if you look at Union Bank, clearly a disappointing set of quarterly updates, because we had the deposit growth as well as the advances growth in very low single digits, wherein the other smaller banks are growing in double digits. Yesterday we saw Kotak Bank in the large cap space growing their advances by 14-15%, and similar was the growth on the deposit front. Despite being a PSU bank, having advantage on the deposit front, they haven't been able to mobilize during the quarter. So I think both deposit growth and advances growth were weak, because of which the stock almost ended at the day's low, 4% down.
That's right, 4% down for Union Bank. Let's take another stock that also saw pressure today. That was your Phoenix Mills. The stock saw some pressure after the Nomura gave out a reduced call on the counter, and they shared a target price of about 1400 rupees per share. Now, the brokerage said that it expects the retail consumption at a slow 9% CAGR over FY25 to 27, compared to a good 40% that the company has seen over FY22 to 25. What they believe is that they are seeing some weak consumption growth at its malls. So the likes of Phoenix Palladium, 4 Phoenix Market City and Phoenix United malls, all of them which account for 60% of the company's total consumption, saw weak trends during the quarter as well. And the company does plan to upgrade and replace the older and underperforming formats, but this would take some time to reflect, and this would be a developing thing that everyone needs to track also. Now, the company is planning to have 3 of its 5 new malls in the tier 2 cities. For instance, their plan to have, say, in Surat, Chandigarh and Coimbatore by the end of FY30, which Nomura analysts believe that will be margin dilutive in nature. So as a result, they expect consolidated EBITDA to clock about 14% CAGR over the next 5 years also. Also, compared to pre-COVID levels, the analysts view the stock quite expensive at this point of time. So Yatin, quite a negative that is coming in for Phoenix Mills, but Nomura was also conservative over Godrej Properties, and they see moderating growth outlook for the counter. Yeah. Why don't you take us through that?
Yeah, so as you were mentioning about Phoenix Mills, the stock of Godrej Properties were also under pressure, and the primary reason why Nomura believes that Godrej Properties could be under pressure moving forward is the valuations. They believe that the valuations are currently stretched, and because of which there is no upside in the counter. In fact, they have put a target price of 1900 on the shares of Godrej Properties, and they have initiated Godrej Properties with a reduced rating. Now, they expect that the pre-sales momentum could weaken moving forward. They expect FY26 pre-sales to the tune of 31,000 crores versus the management's guidance of nearly 32,500 crores. So there could be a shortfall here, and also there are challenges on execution. So there could be some project delays, there could be some new projects which could get delayed in terms of acquisition. So we need to watch this space, especially in the lower interest rate cycle, whether or not real estate stocks do well, because last 2-3 years we have seen bumper real estate sales and the base is also high. So whether or not real estate companies are able to grow despite that big base, and whether or not the interest rate cuts creates demand versus the supply which is there in the marketplace. So yes, Phoenix Mills and Godrej Properties, both stocks were under focus after Nomura's new report on both these counters.
That's right. All right, shifting focus, there was also an interesting report by Jeffre today where they have highlighted Varun Beverages, HUL and Asian Paints as the best contra ideas for the next 12 months. Now, for HUL, the price target remained unchanged, but Jeffre's raised the price target for Asian Paints and trimmed projections on Varun Beverages. In fact, the brokerage has issued a double upgrade on Asian Paints to buy from its earlier rating of underperform, and they've raised the target price to about 28.30 from 2,000 rupees per share. Now, what Jeffre's wrote is that several of these consumer firms have faced several issues in the past few quarters related to growth, competition and margins. But now they believe that most of the risks are already priced in and factored by these stocks, and the brokerage sees limited downside from here on. For Asian Paints, Jeffre's believes that there will be a gradual recovery in earnings starting from this fiscal year. For HUL, they believe that they remain quite positive on its recent change in management, and they expect that the current board will prioritize on growth over margins. And for Varun Beverages, while it has cut its EPS estimates due to weak summer season, but they have cited that the stock is trading at attractive valuations from here on. Yatin, consumer stocks, they have been in focus following the better than expected Q1 updates we have seen. And possibly we could see some upgrades from here on also, because everyone is betting on some sequential recovery in volumes, and they believe that, from here on, there could be some, the underperformance could reverse.
Absolutely, and consumers, what Q1 updates they have got. Additionally, we have a monsoon which is progressing well. That could have impact over the next 2-3 quarters in terms of volumes for the rural markets, the semi-urban markets. So, consumer staples, white goods, all of these segments will be in focus, because last 1 or 2 years have been quite patchy. Let's hope this time we could get some better volume growth than what everybody is expecting at the start of the year.
All right. That's all the stocks we have for today. But yes, once again, a range-bound session so far. 3 days of this week we've gone by, and it's been a range-bound session for both the benchmark indices at this point of time. But yes, tomorrow we'll be watching out for TCS results. The first result that is coming in from the Nifty 50 company, from the India Inc. as well, and that will set the tone of the rest of the earnings season as well. But for now, we have come to an end of this edition of Closing Bell. It's a wrap from Yatin and me, and thank you for watching.